Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, we're going to do a health check of the market. So we're going to take a look at a couple metrics so you can see where everything is. Let's dive in.
Trade Genius.
Hey Bob, good feedback on the weekend podcast, by the way. Curious how you did for the month of June on those strategies.
Yeah, I mean, for me personally, my dividend yield for my ETFs that I own was 70.1% was my dividend yield.
Wow.
So I had a mix between the 3 Bitcoin derivatives and some of the more conservative ones. So it was good. And then plus Tesla went absolutely nuts. So it was a really good month. And we already got some new trades coming in for July that I think people will be really interested in. I think we're really figuring out how to breathe with these. So if you want to check it out, come tradelikeagenius.com. I think these things absolutely are game changers. I'm so stoked on it. But getting back to our original monologue here is that, I don't know why we need the Federal Reserve at all, because they essentially just follow the 2-year yield. I guess, you can't get your free lunch, so you have to invent a bunch of things, but all you have to really do is follow the 2-year yield. And we're at a point now where that 2-year yield is starting to wiggle down and the Fed funds rate is going to follow it, Phil. And we know good news short term, bad news long term. So people, if you want to start, I think it's okay to probably start drifting into TLT now between now and September. If we get the July rate hike, that really sets things in motion. But if they wait till September, you basically have 7 weeks here to build out a full position in TLT. And I think you'll be happy that you've done it. And then also I would start in July. If they cut, I would be starting to pair my most aggressive positions to get ready for the inevitable slide that happens when the Fed starts to cut, Phil.
Yeah, I was talking to a friend of mine and he was kind of asking what, he's got his 401ks and et cetera, et cetera. And he was kind of asking like my take on things. And I was telling him, the easiest thing to do is to, at the right time, and that's always the tricky part, but at the right time, just slide over to bonds, right? If in your 401k, he said he had some bond categories that he could go into. And I said, that's, ultimately we're going into a window here where that's going to be performing or outperforming the rest of the market. And this market isn't used to that, right? This market's used to being all in, big cap names and that the stock index outperforms everything else. But what you typically see though in the 2-year treasury on that red line there is where it starts to roll over. And I think that's you're seeing a topping pattern here in the 2-year treasury. And when we go into a recessionary cycle, that yield's going to come down really quickly. As Bob said, you kind of start to dribble into TLT. Now, is the TLT trade like triggered here? If you look at the SPX TLT chart, not quite yet. In fact, SPX is making new highs against TLT on that ratio. So you can kind of leg into it anticipating that the 2-year is flagging a top here, and then Fed funds rates are probably going to get a cut. I don't know if the 4.1% unemployment rate was enough to give them the ammo they need for a cut in July. One other thing to look at too is the initial claims aren't quite at levels that you would typically see a cut. So that can still rise a bunch. So I think we may get another reprieve in another quarter where we don't get a cut, but I think September, highly likely, especially if the numbers deteriorate. So in that point in time, we should start to see that SPX TLT ratio drop. And then I think once you see that drop, kind of breaks the trend that SPX TLT is in. I think that's your cue that it's time to be allocating into that fully. There's no more time to be fooling around, because once that recession trade takes hold, it's going to be a pretty deliberate move. And, the TLT will start outperforming SPX and it won't look back. It's going to outperform it for the next probably 18 to 24 months, I would imagine.
Yeah, and look, and if you're worried about that, worried about your timing, buy TLTW. It's covered calls on TLT, and that way you get paid a little bit while you wait. And I am both right now, so I've been dripping TLTW for I don't know 6-7 months now, and I own a full position in TLT. Yep. I fully expect to take that TLTW position and turn it into full TLT and let this market run, because I'm looking at $130 on TLT, Phil. And that gets $35 that ties in with a typical move, and that's all we can go for right now. I think it's going to be far worse, and I think they're all going to panic here. So, but you have another chart that's even wilder, Phil, cooler but weirder and scarier all at the same time. And I saw a different chart than this too, but go ahead and throw this up here. This is amazing, guys. I'll let Phil talk to more about it, but basically what it's saying to us is that, guys, they're just buying the top stocks once again, and they're ignoring everybody else. The chart I saw, Phil, was showing not only is breadth getting narrower, but on the loser side is expanding. So as new highs are shrinking, new lows are expanding. And that's like burning a candle at both ends.
Yeah.
That means unless you're in these top stocks, you're losing money right now.
Yeah, you're absolutely getting in the top end of the cycle here. And like I was talking to somebody else too, it's like if you're nearing retirement age, this is not what you want to see. You don't want to see breadth getting so lopsided that you're rivaling the dot-com bubble bust. And, if you wanted to go into the TLT trade here because you're so close to retirement, I would say, yeah, for sure. And, you might miss the last quarter of a move, in terms of like the next 3 months, but who cares, right? You're better off securing the money that you have, because otherwise you're going to be like those retirees in the end of 08, beginning of 09. They're looking to cash out, and all of a sudden they took a 50% haircut on their 401k, and they got to cash out because they're done, they're retired, and either they kept working or it was just totally screwed up. So I really can't emphasize enough, if you're getting close to cashing out on your 401k, start getting defensive now. Don't worry about the next final push here. But if you got more of a time horizon, you got more luxury to play and be a little bit more aggressive. But we're getting close. Obviously, this, when we're getting this concentrated, I'm going to say this is signaling to you and everybody else that, basically a blow off top is pretty imminent here. And once we get that, then I think everything that we've been talking about in terms of positioning is going to start to play out. And it'll happen pretty quickly, and it'll start to accelerate, and we'll get the TLT SPX ratio will start to really accelerate. And then you're going to be in the thick of it. So there's your red flag here on this chart.
Yeah, look, we're having a stealth blow off rally anyway. If you look at the Mag 7, they're all pumping, and then everything else is really lagging. So it doesn't look like the indexes are moving up that much, but it's really gone from the S&P 500 index to the Mag 7 index.
Yep.
As really where the money is. So that's pretty scary, because once these blow up, no matter how good anything else does, the whole market will go down, and selling begets selling at this point. So I just would encourage people to start rethinking your ratio to stocks to bonds. If you're in these yield max products, it's probably coming to the end of the month. You need to start rethinking how aggressive you are with the high volatility ones. Start looking for the lower volatility ones, or start doing the pair trades, because they're going to be coming out at the end of the month. So there's going to be options for you. I just think that, and somebody was complaining in the thing saying you guys are a broken record. Look, I'd rather be warning you ahead of time than telling you afterwards I told you so. So you can't get these things perfectly right, but I'd rather lose potential on some upside to get my head handed to me, because these stock markets go up like escalators and they go down like elevators, and you don't believe the first move down ever. You just think it's another dip to buy, and then you just start getting crushed. And you have to look at 2000 and 2002 as an example, which I think is going to come this time around, because it's a dot-com kind of bubble-ish kind of action. And 73, 74 into 75, same thing. 2008 just kind of was a puke fest. People drank too much whiskey and it all came out at one time. But these other ones are going to be long and drawn out and dragged out, because our political season's coming up, and 2025 is not a year where you want to be aggressive, because either you're going to have a continuation of policies that are destructive, or you have new policies coming in that you have no idea what they're going to do. You don't know what the reaction is going to be. So you better err on the side of caution. So exciting times for us. We're making money. We're doing great. And we're still waiting on Bitcoin, to make its move. Came off the bottom, Phil. I think it had a retest over the weekend here that's holding pretty well. And ETF inflows are still coming in despite these massive dumps by, these institutions, if you will. They're all getting absorbed. So once these are gone, Phil, I think the firecracker is lit.
Yeah, the thing about that is you've had a couple negative narratives, right? Mt. Gox and the German government selling. German government actually today dumped like $1 billion worth of Bitcoin, and the market held up really, really well. Leading up to that, though, I think we saw some front running of both those news items. And so, Bitcoin is very emotional, and it overdoes things to the bottom and to the top. We also are post-halving, we typically get a pullback and consolidation. Where that ends is like 1,000 days from the previous cycle high. And that takes us into the beginning of August. So what that means is by the beginning of August, we should have found a low here somewhere in the month of July, and we're going to start making higher highs and higher lows going into August. So that's something that's been a very reliable metric, that 1,000-day window from the previous high. Once you're past that, it's off to the races. And then you get into these windows where Bitcoin goes on like a 4-month tear, right? So that can take us into the election, and Bitcoin could absolutely blow off, especially if you get, like Trump's talking very favorably about, Bitcoin and things like that. So you could even have a scenario where if he wins, Bitcoin blows off into that win, right? And that's the cycle top. So I could see that playing out if that happened. But either way, regardless, there's going to be a push up into that election. There always is. And so I would be on guard. Don't get too bearish here on Bitcoin. You could see a very, pretty pronounced move over the next few months going into that.
Yeah, maybe we'll show those charts tomorrow. They're really interesting. So I have one, and I'm sure you have one too. And then there's also a cycle chart. Everything's kind of cycling, an inflection point to the end of July. So maybe we'll show that stuff tomorrow unless other news trumps it. With that, Phil, thank you very much. Hope you guys had a great weekend, and we'll catch you guys tomorrow.
Trade Genius.